Mic check, mic check. What's going on, everyone? Good morning, great morning, wherever you are in the world right now. Good afternoon, good evening. It is good that you are here. I am glad that you're here. This is Jordan with Conquer Trading and Investing, getting ready here to do our best to conquer the markets together. We put the work in each and every day. It pays fruits. It pays dividends. If you're willing to put the work in, I'm willing to be here with you, share what I've learned over these past 24 years, teach you how to analyze the markets for yourself, teach you about, let's say, how to think outside the box, and make sure that regardless of whatever the narrative is, whatever the current narrative of the day is that you think it through for yourself and you figure out what's the right side of the market to be on. All right, everyone. Good morning, Sao Paulo, Brazil. Great to see you in here this morning. Yeah, we got a lot of people hungry for attention, for sure. Sometimes they just didn't get enough attention as a kid. I know what that's like. But guess what? In today's world, none of that nonsense. You gotta what? You gotta be a leader. You gotta learn to make sure you acquire the skills, you acquire the fortitude to be able to thrive in this new world that we are in. And it is a new world. Do not be fooled. All right, everyone. Great morning. I can't imagine but bringing anything but a positive attitude towards life. If you do anything otherwise, it is self-defeating. We are winners. We are here to be winners, to surround ourselves with winners, to go ahead and learn and thrive in a positive and supportive environment. Port City, this place is not for you. See ya. Boom. All right, let's get going, everyone. Listen, it's a discernment process. You get to decide whether or not there is value here being offered, value that's going to help make you a better person, a better trader, to ultimately learn a skill set that is invaluable, to be able to trade any market, to know when to be in the market, to when not to be in the market. It is a discernment process on your end, whether or not devoting this time each and every day is something that is going to go ahead and benefit you. Of course, above all, financially, this education here is a financial education. That's what we're looking to achieve. But it also, on many different levels, I hope provides a lot of fruits. The discernment process is also on my end. I'm here to create a community. And if at any point in time you don't fit into that community, it's just, again, it's a two-way thing. It's a two-way thing. So, all right, let's take a look at, look, here's what's going on. I like to frame each session each and every day. And yesterday in the afternoon, in the evening, I had gone ahead and I have everything all pulled up. I went ahead and restart my machine, get it ready overnight. I don't know what happened. There's a power failure or something. And reopening old windows do not work. Starting fresh this morning. Sometimes starting fresh is a really good thing. But above all, as a trader, you better be able to adapt. I think we were talking yesterday on Twitter about what are some of your greatest assets as a trader. I was pleasantly surprised that one of the most common was patience. In my view, my own personal view, it's one of the most difficult to learn. It's something that takes a lot of time and an experience until you learn that skill of patience. But I see that a lot of people have already actually taken upon that attribute. I was really, really glad to hear that. I think one of the only ones that were lacking, because there were many great lessons shared, was that of what I deem to be the most important is risk and money management. And I think that a lot of aspiring traders, if they would spend the beginning portion of their career, right, first getting that in place, they would do infinitely better and they would turn the corner to profitability much quicker. I know as a new trader, you like to focus on first, like entries. And I guess that's quite natural, right? How do you get into a trade if you don't know how to enter into the trade? But really, risk management is such an important piece of the formula. It's Rico. It's Taco Tuesday. Happy Taco Tuesday, y'all. Glad to be here with all of you as we get ready here to go. And you know what, Henry? I think that might be the reason why. I think that might be actually Bitcoin. You're right about that. That's very interesting. perspective. Before we even take a look at Bitcoin, let's take a look at the calendar through the rest of the week. On Friday, we have non-farm payrolls. We also have tomorrow. No, Jordan. Today's Taco Tuesday. We have ISM manufacturing coming out on Thursday. We want to know whether or not the Fed is hiking into falling PMIs or a growing economy or a slowing economy. Right now, the worry is that the Fed continues to hike, to raise rates into a slowing economy, and they're doing it because of hot inflation. That is very troublesome. When the Fed is raising rates, by the way, into a strong economy, generally what happens is that risk continues to trade up and for a while. And as they raise rates and they're putting the brakes on the economy, it takes a while for those forces to happen. I think that what we're seeing here in 2022, in the late part of 2021, is that market participants continue to front run everything that's happening just with a quick speed. And what we've seen happening as the Fed has begun to tighten has been this relentless move downward. Look at that over here. You're just talking about this relentless move down like a slow motion train wreck. It's been very difficult. A lot of people are, let's say, hopeless about what's coming, expecting that a hard landing is a foregone conclusion, right? I think that's pretty much the general consensus, is that the Fed is going to continue tightening until something breaks. A hard landing, by the way, the true definition of a hard landing is that a recession is called. A recession occurs. Now, you could argue and whatever that we just had 2 quarters of negative GDP growth, and that's a recession. That is right. Only, look, for sure. Let's be clear about it. I don't support any administration, and most specifically the current administration. Yeah. But at the same time, because I believe in fairness and justice, very patriotic person. I believe in freedom. I believe in liberty. I believe in the pursuit of happiness. But I guess just once I found out how the system works, how the financial system works, really, it was this video, this documentary called Money Masters that really sent me down a rabbit hole. And then I think it was like the Zeitgeist on money. It might be Zeitgeist on money. And once I began understanding our fractional reserve debt-based system in the central banking system, and then kind of understanding that who was pulling the strings and everything, I kind of got disenchanted in the whole political system. I'm not a political person. With that being said, though, from my understanding, my limited experience in the market over these past, full-time 24 years, that it was never black and white for the definition of a recession. There are many complicated factors at play over here, including the amount of liquidity out there. Even if we were into a recession, it looks like this next quarter is going to be showing positive growth. Are we then out of it? I mean, what I'm talking about, though, is a greater recession. It certainly looks like with, housing market coming off, obviously asset prices coming off, reverse wealth effect. When you look at other things such as the job losses, that's a trend that looks like it's going to continue. It looks like that further ahead, things potentially are going to be looking significantly worse than they are right now. That's the definition of a hard landing. And it looks like that's the way we're headed. If you are going to say that, well, I don't care, and I'm deciding that we're in a recession, then we already hit a hard landing, except that doesn't seem to be even like, I don't think that most market participants agree with that. But it looks like that's where we're headed going forward. When I personally talk about a hard landing, like what I'm talking about is things breaking, right? So this is what I'm looking for. Is the Fed going to continue hiking until something breaks? To me, it doesn't look like that anything is going to break. I know by now a lot of people already expected things to break. What I'm getting at over here, or what I was trying to get at this morning, is capitulation. So just remember that word. We're going to come back to that in 1 second. I want to take a look and finish looking at the calendar with you. We have jobs report next Friday, but really, right, we have a slow week ahead of us, low volume week. Lots of people on vacation. Things start picking up over here the following week towards that middle to the end of the week. And on the calendar, we have a big event. We have the ECB press conference. ECB out of Jackson Hole on Friday set up a 50 to 75 basis rate hike next week. That is significant to the market. And by the way, at the same time, what's going to happen to the DXY? Why I say that? Let me pull up a chart of the DXY with y'all. Why I say I don't want to get off my Bitcoin chart, but whatever. We got to be a little bit flexible over here. Why I bring up the DXY at this particular point is because we all know how heavily weighted it is towards the euro. And right now, I would think that expectations, the way that people were positioned, were more leaning towards watching the Federal Reserve, the US dollar tightening policy, why the ECB continued to have that loose policy. And if all of a sudden they're changing that policy and they're having a higher degree of rate hikes, things might need to be repriced. Now you can say, well, Jordan, they're undergoing a significant energy crisis. Yep, they are. The macro could change rapidly. We have to make sure that we don't get, let's say, stuck into any one type of view, and we remain flexible. One of the most important things I could point about that is here what's happening on oil. And why we were tracking and talking about the macro could change rapidly, watching the breakdown from 119 to here. And so far, that continues to be the right side of the trade in so much that has caused 1 quarter so far of lower, super hot inflationary print. I mean, 8.5% is still incredibly hot, but nevertheless, like one print is not the start of a trend, but a new trend does start with one change of direction. So you never know. And we talk about it being near term and maybe intermediate term. And one of the things that we need to watch and watch closely is what happens with the price of different commodities, but specifically oil. And it's not just ourselves who pointed that out, right? If I look over here and I jump over to the meeting minutes that were recently released by the Federal Reserve, that's not it. Let me just take a look really quick, go through my notes. And I think that this one over here, one more. Yeah, there we go. In the meeting minutes that just were released, the Federal Reserve was pointing out that, look, it looks like the decline in gasoline prices will likely help produce lower headline inflation in the short term. Declines in the price of oil and some other commodities could not be relied on at providing a basis for substantial lower inflation, as these prices could quickly rebound. And that's the thing over here. That's why we're watching the price of oil, because if all of a sudden oil starts, we have this nice descending wedge breakout. If oil starts, gaining some momentum to the upside, this start of potentially month over month CPI coming in could quickly be reversed. Now, I don't think that happens as we look ahead to the 13th over here. Is it the 14th? 14th. Nope. Jump over to the 13th. The 13th over here when we have the next CPI print. I think this print, from my estimation, and believe me, I am no expert. All right, this is just simply like there's no math involved here. This is me just putting things together inside my head that we come in lower than 8.5%. By the way, if we do come in lower than 8.5%, do you think that right now we're looking at expectations are priced appropriately for a 75 basis point rate hike in September? Or do you think the odds will come off significantly? I believe they come off significantly. I think right now the market is beginning, ever since Jackson Hole, to price in more favorably the potential 75 basis point hike. We'll see what happens. I think it's a big clue to what the Fed really wants to do, because they're talking a big game. Let's see if they put up, when it's time to show up. So this month ahead, September is known to be quite a volatile month seasonally. It's not going to disappoint. Now, I don't know if that volatility is going to be to the upside and or downside. By the way, we are seeing and looking at oil coming off this morning, right? So we have nothing more than this. We have the breakout and then most importantly, the retest, right? We had over here, or I had over here with you all, actually 95.60 as an area of resistance. Again, I told you I lost my charts and I had to just pull up something this morning. These were old sketches and notes, and I'm glad to have these because these are actually the ones I wanted to be going off of here with y'all. But nevertheless, this one over here has a different little local support over here, and you could see that that is so far what held on the move into resistance, right? And then the pullback, that's kind of where we found support so far as we resumed off. Nevertheless, this was the place to key off of here going long. We talked about in yesterday's session, waiting for a breakout above that yellow line up there, and then waiting for a retest over there to look to establish a position if that resumed off. That's not happening. We're going down below it right now. An uptrend is still in place, and that's going to continue. Now, what happened yesterday is quite significant, I think. You saw, remember we talked about the Saudis were not happy at all? This is right over here on this date over here. The Saudis were not happy at all that the U.S. and Europe were kind of cozying up to the possibility of working out a nuclear agreement with Iran. And they made it known and they said, hey, listen, we're going to cut production. You know, we're looking at, we don't like the price of oil. We don't think it's reflective of the market. And we're getting ready to cut production at the next OPEC meeting, potentially. You know, hint, hint, do something about it. Then yesterday in the news, by the way, the headline was that the U.S. working with Israel is planning potential military attack against Iran. I wonder if that's all connected. But again, I think that all of these factors need to be considered. I know that we look at the charts, but understanding what's happening with the charts and then what's happening on the greater, I don't want to say that's geopolitical, right? And geopolitics definitely plays a factor in oil. Interesting nevertheless. And here we are, and we're waiting and watching. If this resumes back above, that might open up the opportunity getting back above here again. This is the yellow line. We wanted price to break above. We wanted a clean retest. We wanted that broken resistance to hold that support, and that would have opened up a trade. I know there were a lot of traders yesterday who were taking a signal just on the break over there. That's not how we framed that yesterday ourselves. And let's see if that winds up, that little bit of cautiousness winds up paying off. Now, a breakdown of this trend line over here, very simple. And then you have that line over there getting back below 92.50. That does set up a resumption back down. And we'll see whether or not we're able to go ahead and take out a new low over there right around 86. So that's a good look at oil this morning. And I kind of wanted to lead in with Bitcoin, and I wanted to talk about capitulation. But before I did that, I needed to set up what's ahead on the calendar ahead. Kind of like, what a pleasure to be here with you all. You know, good morning, Adam, JF. Yeah. Oh, there you go, Kevin. I read your mind. That's how I see oil. Yeah, that's a good look at oil. And by the way, if you enjoy being here, please go ahead, support the channel, hit the like button, help with the Google with the YouTube algorithm. And if you're new here, welcome. Go ahead and subscribe. We're going to be here every single morning. Go ahead and subscribe. You could go in the description below. There's a Telegram channel. You could get alerted when we go live. But if at any point you do learn something new, I'm asking you, hey, you know, if you want to go ahead, support the channel, hit the like button. But if you learn something new, if at any point in time you appreciate being here, then at that point, go ahead and hit the like button. I just want to talk briefly about current Bitcoin positioning. People want to know where the momentum is. Did yesterday's beginning signs of some upticks after Friday's bloodbath, after Saturday's bloodbath? We saw like, you know, you ever seen that meme? Jordan, it's a meme. Did you ever see that meme of that like giant red candles coming down and then one small little green candle and everyone's like, yeah, the bull market is on. It's with the momentum is still strongly to the downside over here. these positions continue to hold into profit. Now they've given up from 15%. Bitcoin now holding about a 12% open position. Same thing here with Ethereum. That's giving up more profit, about 5% profit to the upside. Now only holding an open position about 9-10% into profit. And you know what? When you see, by the way, we talked about this last week, when you see Ethereum leading to the upside, that is more indicative of possibly, potentially a risk move beginning to take forth. When you start seeing, let's say, a bounce was occurring and you saw Bitcoin leading on the way up and Ethereum lagging, well, that could be a sign that, nope, this is nothing more than a bounce that's going to be sold right quick. I don't think that people should be reading too much into anything this particular week. Again, it's a low volume week. A lot of people after Jackson Hole went on vacation, won't be returning until mid next week. Just be very careful out there. Nevertheless, what's most important for me is to show up, to be here with you, and to continue to make sure that we find the pulse of the market so that as we move into September and that volatility picks up, as we come into October and then through the rest of the year, we make sure that we're there performing at peak performance, able to conquer the markets. By the way, just throwing it out there, right? I look forward to when the green shoots the green birds start flying again, and they will. I just don't have any expectations that like the next series of trades are going to go anywhere. I mentally, that's like a strong place to be also, right? It's that detachment. It's also knowing that 2/3 of every trade I take stop out. And coming off a couple of back-to-back winners, I just don't have that type of expectations. Now, that might not be because the market, by the way, and this move up on the upside, right? That was a tight range, right? And then Bitcoin finally puts in a good move. And when I say good move, I mean a move that just has a little bit of follow through to it. I was not able to capitalize here, putting together any gains on these little like birds on the upside. Ethereum, much different. Ethereum put together a nice 52% gain, beautiful gain actually. And then all of a sudden it's fallen into profit again now on the downside. Now, sometimes markets do work like that. Sometimes they start going a little bit, hold on one second, right? Sometimes they start going more like this, right? And that's a trader's dream. That is a great place to make money. But markets often are doing what we've seen, and that is those tight consolidations, those tight channels, big move, right? And then again, you had tight channel, start of a big move. I don't know if it's going to go anywhere. This was a bigger channel, right? Led to a gigantic move. But then again, the different natures of markets at different times. We are entering historically a very volatile season, September, October. It is quite possible we see some big trends develop. I don't know which way they're going to be. And that leads up the next piece that I wanted to get into when we talk about people and capitulation and everyone waiting for capitulation. And I hear out there a lot, right? I like to understand and know. I saw that put out as a lot of people's asset skill. They're able to understand what other people are thinking. It's like being at a poker table, right? You want to understand the mentality of those around you. And it's the same thing in the markets. And I see a lot of people, they put out there that, you know what, I'm waiting till the last man walks away and gives up on Bitcoin, and then I'm going to step in and buy. And then and I think that's interesting. And here's the one thing, and I want you to pay attention to that, like pick your ear up. They could be right. Like that's not how it's worked historically, and I'm going to make that very clear to you right now, but they could be right. I mean, that's the thing. You have a lot of people who had really very high upside expectations, myself among them, right? And then those same people who had those very high upside expectations now have very low downside expectations. And, you know, it seems a little bit sensational to me. I mean, I think it's a much stronger attitude saying, look, I don't know what's going to happen. Therefore, I'm going to lose my bias. I'm not going to try to lock myself in and make it more difficult for me to maneuver throughout these, let's just call it as it is, incredibly different, challenging markets, and pretend that I know that I have this crystal ball that's telling me that Bitcoin is going down to X because in whatever year this happened here and therefore Bitcoin. Come on, that's crazy talk. That's crazy talk. But as far as capitulation to the downside, and then we could take a quick look. I don't know if this chart wasn't pulling up this morning. I wanted to look at the 1-year hodl wave with you as that's resetting. The site seems to be slow. I could pull up my my Glassnode account, but again, I don't have anything ready for you. But I could talk about very quickly over here. For example, I'll start with March 2020, Bitcoin coming off 63%. Now, you looked at this point, there was no like capitulation on hodlers by any means whatsoever. Actually, a lot of buying took place down over here. This actually is something that really helped Stanley Druckenmiller understand why he wanted to be attracted to Bitcoin. And there was something different about this market, and it was the internal dynamics of people, regardless of the drawdown, continuing to hold. There was no type of capitulation on hodlers from hodlers over here at this particular point. Hold on one second. I want to see one more time if we could get this chart. I love talking off charts. We don't have it over here. Go back over to the bear market, though. Like, let's look at the bear market of 2018 ending in December 2018. Again, a very similar situation. There was no capitulation. People did not give up on Bitcoin. The way that I'm going ahead and I'm making that assessment is by looking at the 1+ year hodl ratio, right? And if I had the chart, I'm so sorry I don't have the chart to show you. That's a shame. But we'll look at it again tomorrow. It's not like it's going anywhere, anything like that. And I think that, first of all, when you hear someone saying that, it sounds attractive. Why does it sound attractive? All right, well, I'm going to be better than everyone. So what I'm going to do is I'm going to wait for everyone to give up, and I'll still be here. Guess what? Like, either towards the top, and when I say the top, I'm talking about like this number ring a bell, 53,140. That's a technical breakdown. You better de-risk. I'm paying off loans. I'm making sure that I'm taking profit on the paper markets. 35,000. If you didn't de-risk above, that's an important level. Make sure you de-risk at 35,000. 27,000, if you haven't de-risked by now, you're a forced hodler, right? Why are you going to sell now? You're going to sell below 20,000, right? Does that make any sense to you? Why would you do? Well, Jordan, if I sell at 20,000 and it goes down to 10,000, then it's going to, make sense. Okay. Again, I don't have a crystal ball. I have no idea where price is going next. I only know how to be on the right side of that market and make sure that I'm able to trade what's happening. And I do believe that if I had any type of bias, well, you know what? I would have missed out on this big move over here. This was a beautiful 52% gain, and I would have missed that. And worse, most people that have a bias, they kept selling every single rip along the way. And guess what? That was painful. That's why the elation, the euphoria came when price finally broke down. Why did the euphoria come from the bears? It was like all of a sudden, yeah, hoorah, because it was painful. For 6 weeks, for 1 month straight, they kept selling into strength because they had a bias. And all the gains that they were able to put together on the last big move down, by the way, we capitalized big time coming into that move into June on the downside. And all of the gains that they had made, they gave back up on the upside. So it was an emotional trade as price triggered back down on the downside. That's not a place that you want to be trading from. That's very dangerous, and not only very dangerous, doesn't provide any, let's say, it doesn't yield the returns that you're looking for or the fruit. There'll be times when you do well, and then there's going to be most of the times that you get destroyed. All right, so capitulation. Yeah, I really wanted to lean into that, but I really wanted to do that with a visual. We're going to pick back up on that tomorrow. This chart, I think, in this view that we're looking at over here has become very common, right? Do you think that it's appropriate to look at this view not on a log scale, right? How far are we going back on this chart? Well, we're going back a couple of years now. You could look at it on a linear chart, I suppose. I've noticed, and I've talked about this a lot with CTM, that for sure, it seems to me that trendline breaks on the log scale on Bitcoin seem to hold more weight. Nevertheless, let's take a look at this and just a simple little trend line over there, waiting for this market to resume. I want to do that on the log scale, though. I want to just take a different view with you, a different look over here this morning, maybe even clean up some of these yellow lines for 1 second as I get going. And, I want you all just to like look at that chart and how does that look to you? And again, we could put that same little trend line over here. There you go. See, that does that look a little bit better? And when I say that, it looks like when I go off the log that, well, that's very close, right? Very close, and that may or may not be the right place to attack. But again, I'm not worried about when to attack. I'll know exactly when to attack, right? And not only do I know when to attack, I also have the whole mindset that the next time I even attack, I'm prepared for a series of losses, coming off massive gains here. We'll watch and we'll see, but I'm ready for it. I'm battle tested with a beautiful mindset that is going to continue to produce strong gains in the long run, because I know I have a plan in place. Now, this over here, this look on the log scale, that it looks a little bit better for when we might see a resumption out. What is interesting, y'all remember the most important trend line in crypto, right? And, why that saw a resumption, it wasn't long lasting. There were a lot of people in this area. I'm just going a little bit of free flow here. It's been a while I've looked at Bitcoin from this particular aspect. And the reason why is because, I spent the whole bear market building, and that's where all my focus has been on. And I don't have the need or even the desire to almost view markets in this fashion that I'm talking about them with you right now. It's still fun, but I don't really have that need, only because it doesn't produce the results. It's a little bit better knowing what side of the market to be on, when to be in the market, when not to be in the market. Do you ever notice this line over here, though? Let me just zoom in on this line over here. You see that trend line where price capitulated to in June? What's interesting about that trend line, you can see over here also in December, this is prior to the big and beginning, like the new all-time highs, and then that massive run up. How many people were taking profits over here? There were a lot of them. Some big channels taking profits in this area over here, right? Was that early? I don't know. I guess some will say you never go broke taking profits. I think that you never get rich taking profits too early. If you want to be successful, you got to learn to push your winners. When someone's not successful, when you see that they're taking profits as soon as they get into a trade, it's not even possible. The math doesn't work out that way. My own personal gains come off a very small portion of my overall trades. I'm already looking at only 1/3 of my trades being profitable. It's only a small portion of that 1/3 of trades that make the majority of my gains. Do you have that type of fortitude? Do you have what it takes to conquer the markets? So if I go to the left a little bit further, what's interesting about where that breakout was formed over here, forming and firming up that support, which we just tested, is that if you look at the last market, we saw the all-time high priced 19,500, right? It was only a few days. That price was above that area. Really, the resistance was over there and then over here. You could see it, right? Very clearly. I could see that the market found resistance there. Yep, there's no question. Price made a higher high over here, and price went up almost $2,000 higher, albeit very briefly. But that's where the market again found that area of resistance. I think that like when people talk about Bitcoin price for the first time ever trading below the previous cycle peak, from this perspective, I'm not so sure about that. I mean, I don't know that it matters, but I'm not so sure about that. Yeah. What about a breakdown of that level? Is a breakdown of that level going to see some quick and massive cascading down? It looks like we're close to breaking down from that level. It could happen this month in September coming up, right? Why? Well, what happens if that CPI that I'm expecting to come in below 8.5% comes in higher? What happens if it's very clear that inflation is not only sticky, but continues to rise month over month, even as we're watching food and energy prices come off? What happens if the Fed has no choice but to come in with a 75 or even 100 basis point rate hike? I doubt it, but who knows? It's the markets. Anything could happen. A lot could happen that could cause Bitcoin to come cascading down just because we looked at this line this morning. And you could make the case that, well, that's really the previous cycle all-time high, that as far as a structural basis. As far as a structural basis, April was the all-time high of the bull market. Price made a higher high in November. Price and price alone is all you need to trade. At the same time, we want to look at markets from all different perspectives. By the way, there were a lot of people in this particular area right over here as price was July 2021 who were looking for Bitcoin to really do what it did over here later from November down. And they were really looking for Bitcoin to come crashing down. I genuinely wonder how those people feel, or felt, I should say. When I say feel, what I mean that they could say, well, look, I'm on the right side. Yeah, you are, right? Prices, it's $10,000 lower than last summer, for sure. But how did you feel when price had 130% gain while your expectations over here were for it to go much lower? And you were pointing out some NASDAQ fractals from the dot-com era bubble bust, and then price went up 130% and made a new all-time high. Like my really curiosity is what was happening over here for you. What type of emotions were you feeling? I imagine you were feeling emotions because you're trading off of a feeling. You have a feeling that because of past market behavior in other markets, that Bitcoin is going to act a certain way. It's not as if you're trading price action, unless you did, right? By the way, someone that actually has that type of let's say rough sketch bias, I believe, is Crypto Save. I'm going to be getting together with him on Friday. Looking forward to discussing markets with someone real, someone that understands markets. And I'll be able to ask him his thoughts on that. Again, that's that real desire to learn what other market participants are experiencing, what they're feeling, how they analyze different situations. It's really not a question of trying to be right. If you want to be successful, you need to be able to take in all viewpoints and then discern and help form your own. I think that's really important to be able to have conversations with everyone, but that's one that I'm really looking forward to. So anyway, and I think personally for myself, right, this was beautiful in that. So by the way, and rewind, if you go back over here to the channel, and everyone, almost everyone here knows that at that point, I was like, by the end of October, price will make a new all-time high. And I didn't do that like as price started rising up. I did it as Bitcoin was at 30,000. But I have to say in hindsight that must have been just lucky. That, like, I attribute that actually not to skill now. At the time I thought it was, but I would say that was just luck, because I think that this is the top over here. Structurally, April's the top. How price was willed to make that new all-time high, had a lot to do with what we were talking about, and that is the internal structure of Bitcoin and the hodlers and the market dynamics. Over right now, 63% of people that make up the entire Bitcoin market have been holding Bitcoin for a year or longer. If we do see some type of capitulation, that number might come down a little bit. It might go from 63, 64% down to even 62 or 61%, but it would be a capitulation type event. It would be something that was very quick and then back up again. And then you have all of a sudden a stronger market. The internals are still on a greater scale, like 63%. That's a big number. You come off a little bit and back up. Well, you got rid of some weak hands. That's good. But is that capitulation? That's not really capitulation. If you go back and you look at what happened during the dot-com bubble bust, I mean, that was capitulation. That was brutal. That was devastating. I also like to think about, as people make bring up the correlation between the dot-com bubble bust and crypto now. I mean, well, the thing about that was that we were looking at the internet being born. We were looking at everyone's like pets.com, and then you saw like that bubble pop. Crypto and Bitcoiners have multiple bubbles already pop, right? You could like, what's different about this current bubble peak over here? Well, first of all, what's different about it mainly, and the biggest thing is that this really has to do with the macro. This has to do with the Federal Reserve. This has to do with the change in Fed policy and them moving from a super easy accommodative policy to all of a sudden tapering down all of their asset purchases and then raising rates and now moving towards QT and pulling away liquidity. That's what happened over here. Now, we saw in this particular phase massive speculation happening out on the Dogecoin, in the NFT space. It was hot and as most bull markets are. But we've seen that take place in the past as well. We've seen the ICO craze taking place over here in 2017. We saw many projects being launched. And just like in venture capital, where in the first year, roughly 91, 93, 94% of all startups fail. Same thing happened over there. Well, we've been through those phases before. So I don't know that. I think that actually, when you look at Bitcoin, when you look at crypto, the space is massively more mature, including the market participants, whether you're looking at public companies, whether you're looking at sovereign nations, whether you're looking at Wall Street, BlackRock, whether you're looking at ICE, parent exchange of the New York Stock Exchange. I mean, this is not pets.com. This was a $1 trillion market cap, and for good reason. So I think this had a lot to do more with the macro. And I guess what I'm getting at over here ultimately is that, look, I think that a lot of you are really understanding the importance of this, is that no one knows what happens next. You could have the posture that, you know what, I really feel that right now, because the Fed is tightening, and likely they're going to tighten at the least into a recession. And then we don't know what if the Fed causes a recession, including a global recession. Now, it's more likely that Europe ends up in a strong and severe recession. Whether or not the U.S. does, that's still let's just try to be open. I think that it was Darius who pointed out last week that I think that if you haven't even considered, or you're not considering the possibility that the Fed could engineer a soft landing, that you're doing yourself an incredible disservice. Why? Because you boxed yourself in. So where does capitulation come on the upside? What happens if price doesn't make a lower low? What happens if, like we see in September, which is historically a very bad month for risk assets, we see something different happen. Where does that capitulation come in for those that are saying, well, I'm 100% in cash. The Fed is going to tighten and they're going to cause a hard landing. And when Bitcoin goes down to, I don't care what you call it, 12,000. I don't care if you call it 10,000, or I don't care if you call it 3,000, whatever your number is that you're waiting to go ahead and buy back in, right? By the way, I mean, I know that we were early. I know that we were early in calling out where to de-risk, but if you didn't de-risk already by now, and if you did de-risk and on time, most people de-risk down over here, a little bit lower. If that's still early enough, between 47 and 50,000, that's great. At this point, you're not dollar cost averaging back in. You're not continuing to build a position. And what happens if you don't get your magic number? What happens if 14,000 doesn't come in and you don't get a fill? At what point are you going to go ahead and are you going to capitulate on the upside? Here's the thing, that even if something like that were to happen, I would be extraordinarily cautious going forward because of things we talked about earlier in this session regarding the uphill battle we're fighting as people continue to lose their jobs, as the housing market's coming off, as the reverse wealth effect is taking place, as inflation does continue to be a drain on everyone's household budget. A lot of people that missed over here because they just had it's just very poor market execution, I'll say, very poor analysis to be that type of, let's say, deterministic about what happens. Now, there's a lot difference if you're like Bitcoin's going down to 12,000 and then you see this, maybe that last lower high taken out. You could see like lower high, lower high, lower high, and then all of a sudden if a higher low, and then a higher high is made on a swing, you might say, all right, well, even though I thought Bitcoin's going down to 14,000, I don't care. I'm just going to trade what's happening. And that's a great risk to reward. I know where I'm wrong over here. I'll just reverse position if that low gets taken out. Well, that is conquering the markets all day long. That is smart and that's good risk management and trading. But if you are so deterministic about price going to X price down below and you don't do that, and then all of a sudden price comes to $50,000, maybe it breaks over here, that March high, and then are you FOMOing in over here? I think that's extraordinarily dangerous. Regardless if price went on to make a new all-time high or not, I'd be very worried about the economy going forward in 2023 and beyond. And I think that you could be a double whammy. I would just be very careful. Is dollar cost averaging? So look, I know that here in this channel, we went to do not dollar cost average whatever you're doing up until the Luna collapse. When Bitcoin hit 25,500, it was returned to dollar cost averaging. And I do think that historically, this is going to be a good time to dollar cost average into the markets. Now, I don't know, and I said it right over here, I don't know how much longer or how much lower price would go. And guess what? If you're dollar cost averaging, you literally want price to go lower for longer. It is just like the more time you have, and for sure, if we see similar dynamics play out where this is the top and we're looking at the next halving being April 2024, and we're looking at price generally being roughly between 40 and 60% off the all-time high as it enters the halving. We'll just call it somewhere around 35,000. And you have between now and whenever to dollar cost average. And then all of a sudden, because of whether it's front running of the halving, which would occur earlier, by the way, the front running of the halving would occur not as you come into there, but if you have approximately past cycle behavior repeat itself, which I don't think it's going to, it could, and that you have approximately 6 months after the halving, Bitcoin making a new all-time high, and you spent all this time dollar cost averaging, yeah, that's going to put yourself in a great position for sure. I don't think that's what's going to happen though. That is the first thing I there's a video if you want to go look at it over the summer. I'll pull it up for you tomorrow so I could share it with you. I could show you exactly what that game plan looks like. But I said myself, and this is someone who 4-year cycle behavior was the greatest asset that you could imagine, including not only being able to recognize what capitulation was, more importantly, tweeting out over here, this is at like peak fear. Is it similar to now? It's similar to now. It's not the same. It's definitely different. But at this point in time, that like a lot of people had an extraordinarily bearish posture on the markets. People were talking about Bitcoin going to 1500 because of some hyperwave stuff. And it was if you went on any influencer channel on YouTube, you would see that this was like what was attractive and gaining the most clicks, and everyone was into it. And the macro was very similar. The macro was similar in that the markets were coming off. Equity markets was really horrific out there. People were scared. People were frightened. It was very fearful. The Fed was raising rates, and at the same time, quantitative tightening was taking place. And I was able to say, all right, well, because of 4-year cycle behavior, we should be looking within 3 months at price trading at 8,400. Now, price traded up 14,000, way beyond my expectations in 6 months, right? And nevertheless, to be able to put yourself in an early position of power, to be able to lean into this gift over here during the global lockdowns, and then being able again, right, on the breakout of the bull market, a lot of people wanted to sell in towards that 14,000, 15,000 area because it came so quick. People coming from traditional markets aren't used to those type of games that so quick. And then being able to, the 4-year cycle really talk about putting yourself in a position of power. But I said, if price did not have any type of blow off top over here in the fourth quarter 2021, that I personally just simply would not lean into any 4-year cycle behavior going forward. We've done a lot of work looking at the potential changing dynamics of the cycle, right? And whether or not it is going to be mini bulls and mini bears. And I think that theory is thrown out the window too. I don't think that this is a mini bear market. That's a 75% drawdown happening in 6 months. That's not mini. That's substantial. And who knows what's next? I don't know what's next. I don't have a crystal ball. But I know for sure that I'm going to be on the right side. And we'll talk about it here together. Yeah, 5K is possible. So anything's possible. Y'all remember we saw crude oil forward June contract trading negative. It's the markets. Anything's possible. For me, it's hard to conceptualize, right? And the reason I say that is because of the players involved in the market right now. So the market cap right now is anyway. I could see myself fading out to answer that, but let me go ahead and dig in for 1 second to make sure I could answer that as best as possible. Bitcoin trading at $50,000. Bank of America estimated that it takes approximately $93 million to move the price of Bitcoin 1%. Okay, that's at $50,000. So then that means that to move the price of Bitcoin 10% would take approximately 93 million, $1 billion would move the price 10% at $50,000. So if you cut that in half from 50,000 to 25,000, this is going to be really rough sketches here. And I qualified before I went in that I was fading out. All of a sudden you're looking at 25,000, $1 billion is moving the price 20%, right? And then you go down from 25,000, we'll just go all the way down to 12. And now you're looking at $1 billion moving the market 40%. We'll go down even further to 6,000. and then you have $1 billion moving the market 80%. I mean, $1 billion might sound like a lot to you, but to, just take a few different multiple market participants, I don't think it's possible. I mean, it is possible. Anything's possible. But look, I know myself, if Bitcoin went down to $10,000, would be biting at the. I probably would front run it at 12,000, and people will probably be front running me. So I don't think it's going to get down there. But if price came down towards 3,000, I mean, I hope that I would be able. I did it before. I was able to lean in really hard, but I don't think that that's going to happen again. I think a lot of people are hoping for this type of event to happen, where price just comes off straight down and they could lean in and then it goes straight up. But if it happens, let's have the mindset to be there and to capitalize on it. But I wouldn't make that my plan. That's all. Ba-bum, ba-bum, ba-bum. So, everyone. Yeah, we could take a look at Cardano. Bitcoin only because I have the pair right here. It's very easy to do, right? So, I mean, what are your thoughts on that? It looks to me, personally, that price is going sideways, right? I mean, it seems very easy, right? We know that bases lead to big moves. You could easily manage your risk to have a position inside that tight channel. That seems like that you are just like guessing, because I have no idea which way it's going to break out, right? But you could obviously wait for a breakout, whether it's to the downside and or upside, to look to go ahead and take a position. But I don't know why that's attractive. I don't know. It doesn't seem like an attractive play to me yet. Wait for a breakout. Yes, we didn't take a look at the Nasdaq yet. I apologize for that. Let's take a look over here, and let me come down to an 8-hour chart. I want to first go off the chart we've been looking at over here in the Nasdaq. Hold on one second. When I said we've been looking at here as we began our live streams together. Oh. Anyway, again, my all my windows were gone. So looking at the Nasdaq, let's start over here from the daily time frame, and I know we put out together before Jackson Hole. We talked about a level that if it broke, and it was right, where was it, everyone? How do I not have this chart? Hold on one second. Give me 1 second. I want to be able to pull up this chart with you all. I don't have it here. So what happened though, I wish that we could just pull up the video. If you pull up a video from last week, right? This is exactly that trend line that we had here, that green line I just put in. And then I had a horizontal line, and I'm not exactly sure where the horizontal line was. That's the part that I don't like to do, things that I don't know are correct. So I don't know where it was. I think one went here, and then it was like a box that went lower. It might have been these two. I can't say for sure. I'm not positive about that. I know that we had this green line in here for sure. And I know that there was space over here between these two. And since then, price breaking down and losing the area that we said, if price broke below, at that point, it does open up further downside momentum. At that point, I would consider it a breakdown. And at that point, I would be opening up or the possibility of opening up shorts. And since then you had a breakdown and then a retest, that retest, funny enough, just came into that green line. Now, that green line was just left there. It's how we did it. I have to think that if I was paying close attention to this, that would have probably been what a lot of other people were watching, but it's just not what we had. And I guess it's just a coincidence that price came in and touched that line of what we put as support and it held as resistance. I'm going to chalk it up to just coincidence. And price now looking to resume down and after seeing this, the price action, this is easy in hindsight as it's happening, but the long wick down and then price making a lower low, but that looks vulnerable right now to further downside. And, it's a lot similar to when I was asked the question yesterday, look, has momentum shift changed? And I was like, no, we're just continuing to hold a open short position. And I have no idea like what happens next. And that's the thing is that honestly, if you're trading the market successfully, you're not trying to guess. It's all about preparation and planning. It's about risk and money management. Why the entries are critical to outperforming, it all really comes down to how you're managing those trades. And if you're kind of like in the surf where the waves come crashing and you're like moving from like just on whim, you're going to get beaten up pretty bad. But the NASDAQ doesn't look good over here this morning at all. And, there's not much else to add on that. What's interesting is oil, right? Coming off over here. And is that, again, because of, well, let's just say that, look, this got a lot of people in yesterday. This tugged a lot of people in yesterday playing the breakout. I could say, because we did it here together, hey, good job in us like being very cautious here. Like cautious not only on the breakout, making the room up here on the upside, and then on the breakout over there saying, well, we're waiting for a breakout and then a retest of that line and then a resumption up. And it just, sometimes, and I think this, again, that someone talked about earlier, that Bitcoin really teaches patience. I believe that. I've seen it happen. I think that that's something that I know that you're going to learn here. I know that you're going to learn what it means to spend most of your time analyzing markets. And then when something's very clear, you'll know for sure when to attack. It's a lot different than someone who's new to the markets and they're like, where's the next setup? What's in play today? What's going on? It's like a junkie, like a junkie, What should I be like? You're in a rush to lose money. I know that might be attractive if you're a gambler, if you have some type of addiction, but I'm here to make money. I'm here to create and build and keep wealth. By the way, it's one thing to be able to go ahead and generate wealth in the markets. You could do it. There's another thing to be able to keep it. And by the way, it might take you a couple of times of making substantial amount of money and then losing it before you really learn how to not only generate that money, but to keep it. You gotta always be pushing. It's like the spiritual life. If you just stand still, you're moving backwards. You always have to be working. That's why we're here every day together. We're going to make sure that we work hard and we put it on all together. Caleb, what's going on, brother? It'll fill again, sub 18,000. We're talking about the coin. Let's take a look together. Let me not even do it from there, Caleb. Let me pull up over here. Where's that chart we're just looking at over here? Yeah, so oof. That's a perfect example. But I know, I believe, I know not only on your next run. By the way, we are focusing here on an asset class that is undergoing massive adoption. Right now, you could say the market cap Bitcoin is probably somewhere around 350, $400 billion. We're looking at a milestone being when it overtakes the market cap of gold. Call it $10 trillion. That's a 20x from here. I believe that we're going to see that happen. I believe we're going to see that happen in the next decade. I probably believe that's going to happen well within that decade. That's massive growth by focusing yourself, first of all, in an area that you're seeing such massive adoption taking place. You're setting yourself on the right side. You're putting yourself behind the current. Now, it's clear to everyone where it wasn't too long ago that it's not just straight up, right? And by the way, a lot of people became battle tested over here. Bitcoin coming off, 55%. Oof, that was like a speed bump waking everyone up. They're like, whoa, this is real, right? And then all of a sudden back on the ride, and now coming off 75%. That's something that only experience could teach you. By the way, you do become almost immune to the moves, right? Once you've been through more than a couple of cycles at that point. But by the way, that's also because you're now in a much greater position of power. And there's also one other thing I want to point out to you. A lot of traders, most traders who are waiting for that 10K or 3K Bitcoin, a lot of them, the truth is, are newer to the space. You'll notice that a lot of people who have been in the space for a long time, they're not trying to time the market. And they'll be the first to tell you, I'm not here to time the market. You don't get to hold Bitcoin for 8 years, right? And look at the HODL waves and be like, I'm in that section over there. If you're selling it every 6 months or every year and a half or anything like that, Now, if you're the way that you're attacking the market is to be swing trading and/or trading the markets, that's one thing. But I think that for me personally, one of the most fundamental aspects of participating here in the space is to have that foundational position, that position inside cold storage, multi-sig, kept in different geographic locations, and that's not touched. Hopefully, that's able to be passed on to the next generation. That's how real wealth is created. All right, everyone. We're going to call it a day. Thanks for being here this morning. Well, okay. So I don't think this is a great one. I don't think the past 10 years of easy money is over. Okay. Investors have become yesterday I got the opportunity to talk with Jimmy Song, and maybe I'll get that interview out today, maybe tomorrow, soon. And during that discussion, one of the things that I was talking to him about was how right now the Fed obviously is tightening policy, right? Rate hikes. We're looking at quantitative tightening take place, just beginning to ramp up. And they're doing that because inflation is running hot and they need to get that under control. Price stability. Is it possible that things actually break? And then is it possible that the Fed doesn't jump in and go ahead and, expand their balance sheet and restart security purchases through the quantitative easing program? Is it possible that they want to let this thing crash deflationary in order to introduce the digital dollar, the central bank digital currency? We know now that the planned launch of Fed Now is taking place in 2023. I haven't done the research to know. It seems like a step towards some type of central bank digital currency, but I need to do a little bit more research on that. But I think that in the same way that if you're not considering the possibility that the Fed is going to be able to engineer a soft landing, you're doing yourself a disservice. At the same time, I think that you also need to consider the fact that, what happens if the plan is to actually let this crash deflationary? Now, it's my own personal belief, and it's the majority of people's belief out there that, the Fed will pivot its policy. The Fed does not have the desire to go that direction, and that even though they're talking really tough right now, it's even debatable within the near term whether or not they'll put up or whether or not we're going to start seeing any types of changes. Or probably most likely, Fed continues to tighten through the rest of the year, and then they keep neutral rate running higher. And it's a question at that point whether or not actually there is enough liquidity out there that the economy continues to run hot or not. Anyway, I don't personally don't know what's going to happen, and I want to be prepared for everything and every outcome, and at the same time make sure that we well define what we believe is happening and our base case. But it is tricky. We don't know. I don't think that they have the same incentives as you or I. And I think that part could be a little bit tricky. If they were or did have the same incentives as us, then I don't think that they would have, first of all, I don't think they would have miscalculated the consequences of their policy and took so long to tighten. It would have been a lot smarter, a lot more fruitful had they gotten ahead and began raising rates a lot quicker. But they didn't do that. And I do believe that because me and you knew what proper policy should have been, that they must have known. And I have to believe that they didn't make an error. I believe that there had to be some calculated, thoughtful policy being implemented over there. And whether or not that was to go ahead and, we often talk about that on the next reflationary action that has the potential to really, the inflationary forces I think are going to be robust. I think that hyperinflation, why that conversation, even going back 2 years ago, was not a conversation that we could have had. Obviously, that's something that everyone now considers and is prepared for. And a lot of people think that, out of this current tightening, there's going to be another set of easing, and whether or not that's the one or the last one or there's another one after that, I think that's kind of like the general flow that people are expecting, but we don't know what's going to happen. Let's just, let's start with that as our first principles. In order to conquer the markets, we have to be open to everything. All right, everyone. Thanks for being here this morning. Thanks for putting in the time. Look forward to tomorrow's session. Henry, these are unprecedented times. It calls for CTM to be out there with everyone, making sure that we're all out there prepared, looking forward to creating a beautiful, beautiful, beautiful future with you all and to changing lives. Have a beautiful day, everyone. I'll see you all again tomorrow. We'll do it again. Take care. God bless you. And I'll talk to you soon. Thank you. Thank you all, everyone. Thank you for really spending this time here together, for putting in the work. Caleb, thanks for showing up, for being here. I appreciate that, brother. Stay off Twitter is such a good advice. There's no question about that. I'm just going through a couple of questions. I didn't even have the opportunity yet. DXY, we'll watch. We have, by the way, again, coming up next week, we have ECB getting ready for a change, 50 or 75 basis point rate hike. That's going to be a big one. Let's see how the markets begin to price that in. Kevin, the question, obviously we're not getting into that right now, is how do you know when to take profits? How do you? It depends on what strategy you're talking about. But we could talk about a little bit CTM 1.0, trade management, risk management, including when to take profits, when to lock in gains. That would be a very, very, very good session. Let me go ahead and just make sure I star that so I could go ahead and put up a reminder. I like that a lot. Jordan, I don't think the argument is people will give up. I think the debt in the system and the forced selling to come. I don't know. Drive guitar. So when I think about the debt in the system, when I think about the current debt to GDP, I think about that is what's going to force the Fed but to have no choice but to pivot. A lot of people like to talk about interest rates being up towards 20% during the Volcker era. And if you look at the current debt to GDP now and then, one could argue that, well, we're getting close to that level. There comes a point in time as you raise rates where the debt becomes unserviceable. The interest alone becomes unserviceable. I know that TMC Trades has given a wonderful chart. On his interview with Ben Cowan, he put up a wonderful chart talking about as interest rates are raised X amount, this is the cost to service the debt. Only a little bit higher from here, and all of a sudden you're looking at the servicing the debt, the interest alone paid on the debt is more than the defense budget. What was it last year? $850 billion. I talk about that with Jimmy also in that interview. So we'll get into it a little bit further. And there's no, like, these are all discussions that need to be had. I don't think that anyone coming off believing that they have the truth. First and foremost, myself, I know that I don't. I'm here to learn from you all, to discuss with you all, and to talk it out with you all. Everyone, have a beautiful day. God bless you all. I'll see you again tomorrow.